Okay, so this week is a very special week in the stock market and for crypto and for everything, because on September 17th, there will be the FOMC meeting. So the Federal Reserve, Jerome Powell, will tell us whether the interest rates will be cut by 0.5, 0.25, or no cut. And everyone, the market is really expecting the rates to be cut by 0.25. But what happens if there is no change? So in this video, I'm going to tell you exactly what am I doing to protect myself from a potential market turmoil, volatility, and how am I using options to hedge against these risks. Okay, so let me share with you this chart to start. So as you can see here, according to Polymarket is a great website for you to eventually bet if you like to bet, but you can also use this just to check the probabilities and the chances of certain events. And as you can see here, there is a 7% chance that there will be a 50 basis point decrease, 91% that there will be 25 basis points, and 2% of no change. So it's not zero, okay? But if eventually the market, if eventually Jerome Powell decides not to cut the rates, like no change, these could crash the market, could have a very potentially like crash. The market could crash 2 or 3, 4, 5%, or have a cascading effect. The market is now over leveraged. And what I'm going to tell you today is, in the eventuality of there is eventually no change, or Jerome Powell talks about something about bad about the market, we will be covered over there. So of course, to start, you could eventually on Polymarket here click a buy yes, and if you like bet $100 and there is no rate cut, you'll get $4,000 back. So this could be, you can see this as insurance, okay? But if there is a rate cut, then you simply lose these $100, okay? Lose and you don't get anything back. So it's a very binary risk way of covering your risk. You either make it or lose it. And or you can come to Polymarket. This is the calendar, by the way. You can check all the events of the coming week. But you can come to Polymarket. You can try to simulate what will happen if you buy options. Okay, so if I buy Nasdaq options in this case, I buy put options, which go up if the market goes down. I can also do very well. Okay, so if the market declines from the current 24,000 points to 23, for example, my option would do very well. So I'll make like $70,000 with this option over here. And this is basically what I'm going to do. I'm going to Interactive Brokers, which is the broker that I use for my ETFs and stuff like that. And I'm going to buy a put option on Monday. And I'm going to wait until the Fed decision. And after that, I will sell the put option, no matter what the price is. And when compared to betting on Polymarket, this is actually a bit better because the option will not lose the entirety of its value if the market doesn't crash. Okay, so imagine if you invest $1,000 in an option, a put option. If the market crashes 5 or 10%, that put option might transform your $1,000 into $10,000. But if the market doesn't crash and actually goes up 1 or 2 or 3%, your $1,000 might become $800, $700. So you don't lose everything. And after that, you can still sell your option, your insurance. And that's how sometimes I use options to hedge against volatility or specific events. By the way, in this case, you can also kind of say that I'm shorting the market. I never do kind of naked short. I only do from time to time some shorting in order to protect myself, in order to buy a little bit of insurance. All right, guys, if you think this was useful, actually, I share way more on my Be Limitless community. I will leave the link in the description of the video. And if you enjoyed the video, please give it a like and subscribe so that more people can see this video. All right, I'll see you in the next one.